Hi, my name's Leon Rowe, currency trader and trading coach at Trading 180, and welcome to this week's supply and demand Forex technical analysis. If you're new, welcome, and if you're returning, welcome back. I really do hope that you find my supply and demand zones and the weekly analysis useful, and apply it to your trading and getting some success from it. Just to let you know that the Forex pairs are time stamped in the description box below, and again, if you're new, supply and demand, basically why you should trade supply and demand is because they are the best areas of determining potential value on a price chart. We always determine value. I'm a fundamental trader, then I use the technicals in order to, basically time my entries and look to see, try to take advantage of other traders and where they're losing and where I'm trying to win, as the market is a zero-sum game. But what you want to do is just look for supply and demand zones, fundamental analysis. Once you've done your fundamentals, which determine strength and weakness, and you can, if you're new to fundamentals, I have a fundamental analysis course. Again, link is in the description box below, where I go over, major fundamentals and sentiment analysis. And if you click on that link there, I give my fundamental bias. It doesn't include, again, risk sentiment, risk on and risk off. It's just my fundamentals based on the data and what I am bullish on the dollar, and if I'm bearish on the dollar and on the yen, it means that I can just go and look at the dollar yen and look for demand zones. That's pretty much it. Obviously, this only takes into account fundamentals. So the Japanese yen is a beneficiary of risk sentiment. So when risk is off, meaning that when there is a bit of turmoil, uncertainty in the markets, big money will flood into safe haven assets, which is the Japanese yen. And that will strengthen. But all things being good, when there is fundamentals kick in, risk on, then the dollar should be the dominant currency and the stronger currency. So I use basically this spreadsheet updated pretty much every week, updated today, and give my ratings. And if you want to, of course, you can follow along, but I always advise you to do your own research as well. Never follow anybody pretty much on a YouTube channel, as this is not financial advice. But check out the course and you'll understand why I am my bias on the currency pairs, which makes it just a lot easier to then look at the charts and pretty much pick your direction. Also as well, if you do want to follow along, Trading View channel, pretty much just go to the top ticker. If you go to people and then look for Leon Rowe, and then the charts that I go over in these the weekly videos, you can find on the channel as well. So let's get into it, as we do every week. Actually, in fact, before I do that, let's just go over a couple of fundamentals just a week ahead. This is a website called tradingeconomics.com, which I use pretty much every day. One of the websites I use every day. And just a little synopsis. So next week, basically this week, from Sunday open, important releases include US preliminary reading of Michigan consumer sentiment, industrial output and producer and foreign trade prices, UK inflation, China trade figures. That's going to be a pretty big one. Japanese inflation, that will probably be also. Investors will also react to UK parliamentary vote on Brexit deal and OPEC monthly report. So the Brexit parliamentary vote pretty much is going to be will be a market mover. Right, it's more sentiment driven. So again, let's see what happens with the pound. So getting back to the charts, and we're going to start off, as we always do, on the US dollar index, the Dow Jones dollar index, and it's just a basic measure of dollar strength against the major currencies like the yen, the euro, and the pound. So from the last update on the Trading View channel, I think it was the 8th, that was last week, what we had was prices come down into this demand zone, It's just these two demand zones, and this purple zone is horizontal support, where other traders would be looking to also potentially enter and buy the Dow Jones Dollar Index. Actually, buy the Dow Jones Dollar Index, but we'll look at the Dow Jones Dollar Index and look to buy the dollar against other currencies like the obviously dollar yen, dollar Swiss, dollar CAD. And we use this as basically just confluence, right? If this is basically this is bullish, then there should be some dollar strength against the major currencies, and adds confluence to any dollar type trades or dollar crosses. So load new bars, and what happened is obviously this week we've had pretty much a wait and see approach when it came to, I think it was CPI data, and what we have had is prices, pretty much make their way lower and put in, pretty much holding at this lower demand zone where you've got this area of horizontal support. Will it hold? Again, we don't know. It's fundamentally driven, and just because I'm bullish on the dollar doesn't mean that prices, won't go any lower. Again, they can come here, and then they can come obviously down to this demand zone. But if you do start to see some bullish price action, that's where you should jump onto any dollar crosses and then look for potentially some buy trades if we get some good news out of from the Federal Reserve and interest rates and the economy, right? So let's go to the charts and update it where we are. So this is a current update. So pretty much here we go. We've got, if prices start to again break higher potentially, then you want to be a buyer on the dollar yen, dollar Swiss, dollar CAD, etc. We could obviously see prices break lower, right? And let's zoom out a little bit, right? And then that would be the next area to potentially, if you're looking to buy the dollar. If you're looking to sell the dollar, then you'd be looking for supply zones, and we've got a couple of supply zones, one right there, supply, and then we've got another one here. And lower highs and lower lows are areas, and higher lows and higher highs are areas where we plot supply and demand. The beginner course guide to supply and demand is in the description box below. It's not drop based rally based drop. That's not the way that I trade supply and demand zones on a daily time frame chart. It's lower highs, lower lows, higher lows, and higher highs. So if you're looking to sell the dollar, you'd be waiting for prices to really come back up into here before looking to sell on the any of the dollar crosses. If not, here would be an area that you'd be looking for. And if we're looking at horizontal support as some confluence, then again I'd probably say something like this area here, where you have resistance, bit of resistance there, bit of support there, resistance, bit of support, bit of choppy there, but then you did have prices hold in this area before breaking lower. Within this area of supply, probably there would be the area I'd be looking for. So again, resistance, bit of support there, bit of resistance, bit of support, again support, and then you've got some resistance there. And why do we use support and resistance and supply and demand? To really determine the supply and demand order equation, forced and willing supply orders within areas of value. So basically that goes into psychology, technical psychology, as to why there should be more supply in an area, more demand. And again, the supply and demand order equation video is in the description box below. So you've got a lot of content to watch when it comes to supply and demand. It's not just about looking at supply and demand zones and trying to trade that from there. You really have to kind of go a bit more in depth. So those are pretty much your areas that you'd be looking for this week. And if prices do react in these areas, again, do your fundamental analysis and decide before looking at a price chart. So next on the list is the dollar yen. So dollar yen from last week, what we had was pretty much prices stayed within this 109 to 108, really about 120 pips or so of movement. Not much at all, to be fair. So let's go to chart for dollar, yen. Zoom in a little bit. Yeah, so at the moment really there's nothing to be had. So what we're looking for now is we need prices to really kind of either break higher, and if they do break higher above this swing, right, you've got a high and then you have a higher high. So this would create a higher low, and then what we would do is draw our demand zone from here, right? If this makes a new higher high, and then what you'd be doing is waiting for prices to come back down into this area here before looking to take a long trade, or your first long trade. If you're looking to for short trades, let me just get rid of some of this, then you'd be looking for either prices to make lower low, because then you'd have move down, move up, and then a move down where you have a bearish candle close, and then this would be your area of supply, right? That would be the area of supply right there, right? Or what you'd have, and let's just again delete that. If you still want to be short and prices are coming up, right, then you'd have to wait for prices to really come into this area here, or these areas here, the lower area where you've got areas of support and resistance within this supply zone, right? Or if you're looking at prices coming down to the 105, I don't think they'll do that anytime soon, barring some, you know, again, some really intense risk off, you know, scenario, depending on what happens in the world. And then you'll be looking for a demand zone right there. So really not much this week on the dollar yen as far as opportunities from a daily supply and demand zone perspective. So on to the dollar Swiss. And the dollar Swiss, since the last update, which has been a week or two, these levels really have held, right? So you have, you know, lower highs, lower lows being made. So if you did manage to get in around here from the last week or two, well done to you. Demand zones haven't been strongest at the moment, and again, risk being off at the moment. There was some risk on sentiment that came into the market. So what we did have this week, and let's draw some more. There was a supply zone there, but obviously we've broken through there. So what you want to do is wait for prices to probably come maybe slightly higher within this area here before looking at any potential shorts. I think there probably is going to be, it's a little one, an area of support there, bit of resistance. So again, you just use this area here and then zoom down into an intraday time frame and see if you can get a bit more detail. I made a video about that this week on how to use daily supply zones with intraday support and resistance, and I go into a bit more detail about how to do that. So again, these are the areas when it comes to, from a supply perspective. From demand, again, we really haven't created any new demand, even though there is potentially demand here, right here. It's because it hasn't really made a higher high, right? If it starts making a higher high, then this becomes an area of demand that I would be interested in buying the dollar, right? So that would make its higher high, right? We've pulled back, bearish candle, and then we made, if we make a new high, then we pull back into this area. This is where I'm looking to be a buyer, right? So obviously that hasn't happened, So for now, I'm not going to put the demand zone there where I would normally do it. But if we zoom down into a lower time frame, you can see that there is definitely demand right here. So if you do, choose to enter on, say, let's say for example a lower time frame chart, you can definitely see that prices have risen from pretty much 97 to like 98.50, so that's about 150 pips. So on an intraday time frame, decent, but from a daily perspective, what I want to see is just prices make a new high before getting in long and choosing to get in long. So that's the dollar Swiss. Next one is the dollar CAD. So dollar CAD, from the last week or two, we've had really this massive, say massive, but it's quite a severe drop. Oil prices have been increasing, which has helped the Canadian dollar as well, and obviously some bit of negative sentiment towards the dollar wait and see approach when it comes to interest rate hikes in the economy. So if we press play, we didn't react off of this area here, but we have reacted off of the lower end of this demand zone, right, where we've had also the confluence of horizontal resistance, support in this area, right? So let's go to the charts, dollar CAD, right? And so we've really but we've reacted around here, and there is an entry, right? A nice outside candle, right? Which I do like to enter on, right? Especially after you've got a drop of 1, 2, 3, 4, 5, 6 negative candles in a row, right? And again, this isn't financial advice or trading advice, just saying that if you believe that the dollar is going to get stronger and this is your entry trigger, then decent entry trigger, right? From a demand perspective. Also as well, I haven't really talked about it, but you've got dynamic support and resistance within these areas of demand as well. So as some extra confluence, you want to look for maybe potential 100 and 200. So we do have the 100 EMAs and SMAs coming into this area, right? I don't think you're going to get the 21 and the 50. It's going to be way above, yeah. So the 100 and the 200 right here, decent potential entry, right around this 100 entry. So 132 area, and we could see a bit of a pullback. How much, we don't know. So looking at an intraday time frame, right, if you want, then you'd be waiting for either entry on a potential daily time frame chart or maybe a bit of a pullback before looking at getting long. From a supply perspective, there really isn't anything until really way up here in the 1.36 area. So if you were looking at getting shorts, you'd have to again wait for the market to create a shorting opportunity. So that would probably look like, probably for now, a move that does something like this. So we've made a move down, we move higher. Then if we break below, prices create a new low and a bearish candle, right? It goes below the swing low, then that becomes a lower high, right, and a lower low, and then that would be the definition of what we would call our supply zone, and there would be the way the supply zone would be. And then we'd be waiting for prices to come back up into this area before looking to get short. But for now, there really isn't anything from a selling perspective, right? And remember as well, if you're trying to sell the dollar and buy the CAD, right? You are buying at the highs. When I say buying, you're buying the CAD at an expensive, potentially expensive area, right? The money was made from here down to here. So try not to buy at an expensive area. Wait for a pullback or wait for the market to prove that this area is an area of a bargain area, right? By making lower lows, and then you wait for the pullback. That's pretty much how it goes. Moving on to the New Zealand dollar. And the New Zealand dollar, for some strange reason I haven't updated this in a while, so we have had some price movement, and you can see where prices over the past week or two have reacted, you know, in certain supply zone areas, reacted there. But again, with a wait and see approach with the dollar, it just basically pushes prices to a bargain area if you want to be a buyer of the US dollar, right? From a New Zealand dollar perspective, you can see where this demand zone, right? You got a bit of a spike through that demand, but you also had some horizontal support and diagonal support as well within that area. Prices did make their move higher, right? So that obviously coincides with, if you go back to the dollar index, you know, making you know, some lows and getting weaker, right? You can see obviously the New Zealand dollar was a beneficiary of that dollar weakness. So let's go to New Zealand dollar, and we can delete that, delete some of these zones as well, these areas of diagonal and horizontal support and resistance. This one's still in play. So going back to a blank chart, we do have an area right here, right, where prices, or anywhere pretty much from now, right, from a daily perspective, we've got a daily resistance, support, resistance. So from a daily perspective, anywhere probably up to this 69 to 68.50 level, right, is a decent short, especially if it comes into this area of diagonal resistance as well. And again, if you were to zoom down into a lower time frame, then you'd be looking at probably an area like that, where you can start to see where there's some definite support and resistance in this area. Let's change this to support resistance. You can see, if you were a 4-hour time frame trader looking at this area and looking to get short, then decent area, may want to pull that down slightly. So you got resistance, bit of resistance and support in that area, support there, and then you can start to see now prices are reacting in that area. Again, it's not necessarily a recommendation to buy or sell, so definitely do your research. Also, again, what you want to take into account, if we go back to daily, is where are prices most likely to range from. So you've got range, right, where this is a cheap or expensive area. This is definitely a cheap or expensive area. If it was a bargain, if you were buying the New Zealand dollar, we're above or around fair value, and if you think you want to be a shorter and a buyer of the US dollar, then you know this would be the area where you'd be looking at this being a cheap area or bargain area, right? So the first area you want to start to look to get short, right? And if you're looking to be a buyer, then obviously you've got these demand zones in this area. So demand, and what I'm going to do is I'm going to move that one, because we've got quite a big area right here, right? The last supply candle before prices make a new high, and we had quite a long wick, and that was from the little flash crash that we had. We can go, so those are your demand zones right there. And again, from an overall range, that's the immediate high, right, and that is a potential low, right? Then we could want to range between that area right? We don't know which one's going to be the expensive or the cheap one. Again, we just do our fundamental analysis and we choose a side and a direction to trade in. So those are your areas when it comes to demand. And if we just look at some potential demand, some confluence within that area, probably say there is a decent area to look for any buying opportunities. And there's probably one around, can see it around there as well. Right, I'll get rid of this as well just to kind of make things a bit clearer. Right, so if you do want to be a buyer, you've had support, bit of support there, resistance, prices come down into this area, this first demand zone, or maybe the top of this demand zone, then you probably want to be potential buying if you're taking advantage of the trend in the short term. Anyways, actually let's look at some moving averages and see where they are. All right, you got the 200 way above, it's broken above that. So the 21 and the 50 are going to be around that area. Yeah. So from an intraday perspective, you may want to look to potentially get long around this area if you're looking to buy the New Zealand dollar. Moving on to the pound dollar. And the pound dollar, if we press play, we did have, price react off of that area there. So resistance. I was very cautious and I did say in a video this week that I'll wait for data to come out before thinking about entering onto a trade. Didn't enter as the data came out. GDP was better than expected, even though there's Brexit sentiment. The dollar really didn't impress, to be fair. So so we had this pretty much break up above. So if you are looking to enter on the pound dollar, then what you're looking at, and I'm going to get rid of this diagonal area, and I'm gonna I'll get rid of this as well. All right, we're looking at prices coming up into this this area here. Put this 1.29 round number for looking at any shorting trades. We're looking for long trades now. We've actually created demand zone right here. So what I'm going to do is I don't like to really clash my supply and demand zones, I'm going to draw this right around here. All right, just for argument's sake, like I said, more of a fresher area of supply. This hasn't been, especially up top here around this 129 area, hasn't really been touched. So that'd be the first area to look to get short. If you're looking to get long within this demand zone, then you'd be looking probably around here, where you can see getting some support, resistance, kind of broke above, now acting as support in this area. So again, looking at that area there as an area of support. Now this is a bit of a tricky one. We also do have a wide area of demand here, right? That does, and for those of you that have taken the course, that does count as a wide area of demand, but I'm not going to draw it on there for now, right? Just so that I don't want to keep, again, I don't want to keep the charts cluttered there, but this is going to be a first area to look for any kind of long trades. And if prices do break below here, right, then I'll update the charts as to where I think there will be, some demand within this area. There's definitely demand, right, from here to here, right? In fact, probably draw it there. Definitely strong demand in this area here. So if I'm likely to draw any demand, it'll be probably for like that. But again, it's not the way I draw demand. It would have to be drawn like this, but I'm going to keep it clear for now, and then I'll update you guys as to where to draw the supply and demand zone once prices do create, if they do, you know, break below that area there. But I would definitely say the lower end is going to be the strongest area of demand, as again, just going back to, if we're looking at an area where we've got a high and a low, right, the value range, right, if this starts to reverse from here, right, then this would be fair value. This would be the bargain area if you're looking to buy the pound, and this is where we expect prices to potentially range from, right? So you always want to try and buy at highs or at lows. Moving on to the pound yen. So again, in the past couple of weeks, we did react off of this long-term demand zone here, spike through, and then prices again, just like I think the dollar yen, are really within a certain kind of tight range. Don't think anything to really write home about. And let's go to the pound yen. Yeah, again, you'd probably be looking for similar analysis to the dollar yen. Prices go up, right? This is where your first area to look for shorting opportunity, but it also creates a demand zone right there, right? Demand, that would be the first area to look for buying opportunity. And if this does create a higher high, higher low, right, and a higher high, at the moment it looks like it is, then you've got again this this wide area of demand right here, right? And then what we would do is probably zoom out and look to see within this wide area of demand where there was some support and resistance, or diagonal support and resistance within this area. In fact, I'll do it now quickly. There's definitely one right here. Oh, wrong tool. There's one right here, you can see, right? If we zoom out a little bit more, start to see where you had support, bit of support, bit of resistance within that area, resistance, support there. So this is the area that I'd be looking for any kind of buy trades, and again, probably down at the absolute lows as well, where you've got that area, it looks like, of support and resistance. So you can see that area right there where you've had again some support, bit of resistance, hasn't reacted, but then you've got a bit of resistance there. I could probably draw that zone slightly lower to encompass that. And then, so those are the two areas, and those are the areas that I'd be looking for buying opportunities within this large demand zone. Yeah, I think that's pretty much all that really needs to be said about it. Let's look for dynamic and the 100, 200 above. And you've got the 21 and the 50 coming down as well. So you've got some dynamic support and resistance, or some resistance coming into, you know, this area potentially of supply. From a technical analysis perspective, moving on to the euro dollar. And the euro dollar, we've had a few weeks where we've, you know, reacted off of this, the bottom of this supply zone, and now we've broken higher up into this higher supply zone, and now we're pretty much selling off, right? So going back to the charts, let's look at the euro dollar. And some new zones need to be drawn. I would take that off for now. If you want to be a buyer, there's a nice buy zone right there. And then we also have some horizontal confluence, right, where you've got support, 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 resistance, 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 resistance. Prices have come down into this area here. If you think there's going to be some dollar weakness and some euro strength, now again would be, you know, this week at some point, this is the first area to look for buying opportunities. If you are looking to sell, prices did react off of this supply zone here. I can delete this. And let me actually have a quick look. I think there is also an area of support and resistance. Support, 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 support. Bit of resistance there. But wait for, again, prices to come into this area here before looking at shorts. That was the first opportunity right there. So if you do see prices come up this week, that would be the first area to look to get short. And then your next area to look to get short would be the higher area right there as well. Let me just see something quickly. Yeah, so that was a negative candle or bearish candle. So we've also got some demand right there as well. Also, so again, these areas of demand, again, I think it's quite, I wouldn't necessarily force, there is a bit of an area in here, but I'd probably go down into, again, the 4 hour to look for an area of support and resistance. Where you can see there was an area right here where you had support, support, but support again. So around this 1.135 level, again, if prices do come down into this area, that's the first area to look for any kind of long trades on an intraday time frame. But from a daily perspective, it does look a bit, it's not necessarily the best area to put any kind of, you know, horizontal support in that area. So yeah, those are your options. Let's look at maybe some dynamic. Right, we did react off of the 100 a few times on some previous supply, but obviously the more times the level is touched from dynamic, diagonal and horizontal, the weaker it becomes. Obviously price is broken up just below this 200 moving average, right? So if we do get prices come up and maybe touch this 200 MA, creating some sort of double top formation, potentially get short again if you believe that the dollar is going to get stronger. Euro yen, the euro yen, let's go back. Euro yen, again, like a lot of the other yen pairs this week, we're pretty much just in a bit of no man's land. Nothing really happening. So again, prices make new highs, first shorting opportunity, and that obviously creates demand if you do see something like that happen. From a supply perspective, if prices do make lower highs and lower lows, then you're waiting for price to come back up into an area of supply before looking at potentially getting short. I'm gonna pretty much just leave that at that. Not really much to say about that. Now let's look at the Aussie dollar. Aussie dollar. Again, we've had some bullish price action on the Aussie dollar. Prices did kind of react in that supply zone right there, and we've just had some average news from the dollar as far as the US dollar. So and some positive news. I can't remember what it was that came out this week, and we're up into this supply zone right here. So looking at the Aussie dollar, let's get rid of some of these zones. And so First area to look to get short is probably going to be right now this week. We've come up into this area of supply, and we've got another higher area right here. We've got some support and resistance within that supply zone. From a diagonal support and resistance, yeah, within this area here, you could see prices maybe move lower, right, and then move higher within this area. Doesn't mean that you shouldn't necessarily get short now. Again, this is the opportunity that presents itself. Don't have to wait for prices to do a double top if you don't want to. But if it is in your plan, then be my guest. If you're looking at demand, you've got demand zone right here. Again, you've got quite a large demand zone from this this spike right here. So then what I'll do is the first area you're looking to get long is going to be the top of that demand zone there, as you had support, and then it's broken down, broken back up. In this area, you do have a bit of an area of support and resistance. If you drag that across as well, so from the top end, support there, resistance, support, bit of resistance there. So if prices do come back into this top of this zone, this 0.715 level is or thereabouts is going to be the area, to look for any kind of pullback trades and look to get long. And finally, we have the Australian dollar, Japanese yen. And again, really actually a bit better this week as far as it's reacted. So other than the other Japanese pairs, so you've had a bit of a reaction, pullback. And again, I guess prices have been a bit risk on this week. There's been some risk on sentiment. So let's look at the Aussie yen. You've got your demand zone right here. Again, you've got higher highs, higher lows being made. So prices move up, pull back. It's made a slight new high. Anybody's book, that has to be high highs, higher lows. Not necessarily the strongest area of demand at the moment, right? But on an intraday time frame, if we went down to something like the 30-minute, right, this is what it would look like. So if you do trade intraday time frame charts, this is where you'd be looking at this area here would be where you'd be looking at buying, right, anywhere around here, or even better still in this area here. And I do like this area. If I was an intraday time frame trader, this is what I'd call a CPR zone, right? And I'm going to be releasing a CPR course, matter of fact, for those of you that are still watching this week. Maybe next week, depends. But I'll be releasing a course on capture pain relief zones, and that is a nice capture pain relief zone on an intraday time frame chart. So any bounces from here or within this this area right here is decent. But again, going back to the daily, then we'd be looking for, from a daily time perspective, really have to kind of zoom out before we can get any major, probably say something like that, maybe draw it down a bit around here. So that'd be the next area that I'd be looking for any kind of buying opportunities. Anything lower than that, I'll have to just do maybe a bit more analysis. Yeah, so even though this is from 2011, you can see that prices have reacted from that zone right there. So those are your so that's your areas within this large demand zone. I'm going to delete this one from here, right? And so yeah, so if you're looking to get short, those are your areas to get short at the moment. If you're looking to get long, those are going to be the areas to look to get long. So we do have the confluence again of diagonal 1, 2, diagonal resistance within this area. So if risk starts to come back off, say back on, but if it starts to go off, right, then the Japanese yen is a beneficiary of that as well. So you got decent sell set up. You've got the 21 up above that as well. So it's looking like a very, very good technical trade. But again, it just depends on the fundamentals, as fundamentals are really what move the market, and sentiment, of course. So that brings us to the end of this week's video. Hope you enjoyed it. If you do have any questions, just leave a comment in the section box below, or send me an email at info@trading180.com. Don't forget to like, subscribe, share, and until the next video, guys, take care.